So we've got some really weird stuff going on with Nike stock lately. Their stock has actually gone up about 15% in the past day, which is a huge spike, and it's also up about 21% almost in the past 5 days. This comes after a report that there will be a forecast for smaller sales, profit drops, and tariffs will cost them near $1 billion. You would think it would do the opposite. They're actually trying to diversify their supply chain away from China, which is going to have, looks like about a 50 to 55% tariff. They expect sales to be down by mid-single digits in the current quarter, following a 12% drop in revenue during its fiscal fourth quarter ended May 31st. Gross margins fell by 440 basis points, yet despite all of that, shares rose 15.2% or so. Again, I just showed you the charts, about that, around 15% on Friday. So they're also struggling in China with revenue falling 20%. And then, of course, these tariffs are going to add on to that. Also, foot traffic into Nike stores has been declining since last year, although it didn't decline as much in May. One of the only pieces of good news here is that same-store sales at Nike-owned stores ticked higher, rising 2%, compared to the 2.6% decline analysts anticipated. So basically, it sounds like the CEO is like, well, we knew this was going to happen. It's not looking good, but we're going to figure it out because we saw this coming. And they're trying to rely less on China while these tariffs are coming into play and possibly costing them $1 billion. So why is their stock up 15% in one day after all of this bad news?
So you still had the biggest year-over-year revenue and EPS decline in 5 years. The question, obviously, that the market has made its decision on is that the worst is now behind this company. Is that true?
Man, I'm so glad Linkster's on with me today, because her and I have gone back and forth on this name for a long time. And the last time I was on set, we talked about Nike again in my value portfolio. Sometimes you buy value stocks and put stocks in a value portfolio for the turnaround. And we bought this stock because operationally we really thought it was going to be turning around. We saw that from a valuation and earnings growth basis, this stock had a lot of problems, but obviously with the news today, it's starting to come out to fruition with respect to these operational issues that they've changed. So that's the quintessential type of value bottom. We feel good about the report, and we still like the stock.
I mean, let's be clear, though. Nothing's happened yet, right? You
No.
can't claim any bit of victory on any bit of turnaround. You're just thinking that maybe now the turnaround can actually start.
So he's literally saying that they believe in a stock because it looks like things could turn around based on what adjustments Nike is making. But nothing's really happened yet. So this is all kind of hypothetical, which is a big part of stocks, but still, that's a huge jump for just mostly bad news and some potential based on adjustments.
Shares of Nike surging 15% today after better than expected earnings and first quarter guidance. Management saying they expect the declines in sales and profit to moderate from here, even with a nearly $1 billion hit from tariffs. Here to discuss, Jan Kniffen, who is CEO of J. Rogers Kniffen Worldwide. Jan, it's great to see you. And a lot of people, I mean, if you just looked at the results, you'd think this company's in terrible shape. You know, gross margins down 4 points, sales down 12. I don't know what the exact numbers were. But as ever, a lot of that's priced in. Why are investors so excited about what they heard last night?
Well, I agree with you. It was a tough quarter. But then again, expectations were very low, right? So, you know, the guidance, the commentary, everything they had to do here, they did well. And so I got excited about this company back in November. And I thought things were going to get better. I thought things were starting to change. And then, of course, they went through the valley of the shadow of death in April. And suddenly I was like, okay, now it's actually time to get excited because this company is going to change. And now it's actually looking cheap if you happen to be an investor. And so I think now, bang, suddenly they're up a lot. But they're getting to where they have to be. They're going to be in much better inventory shape by the end of the year. They're going to have new product flowing. And now they're getting to the point of now we're going to under-promise and over-deliver. And when companies get to that point, the world gets excited about them, and you start to see everybody get interested.
You know, all
that's what I think's about to happen.
So again, people had low expectations. They think that, well, they have potential to turn this around. They seem to be in the early stages of turning this around. Things could be looking good as the year goes on, but they had a rough first quarter. But the thing is, Nike it's a older company. It's been around a long time. We all know what Nike does. What kind of innovations are they going to make? What are they going to do that's that much different than what they've always done? Other than maybe improve the margins a little bit, diversify their manufacturing to where they don't rely on China as much, things like that. And the tariffs are still a $1 billion problem. So let's dive into a few things about Nike. Nike has obviously had a great day and a great week. Over the past year, though, still down 23.52%. Year to date, down 4.8%. In the past 5 years, down 23.09%. None of that looks good. Obviously, a great day today, but in the scale of what it's looked like over the past year and over the past 5 years, it's kind of a minuscule amount in the grand scheme of things. You're going to need that to keep happening. You're going to need that to be a trend and not just one or two big days. Now the PE ratio is actually not that bad, 23.97, but the problem is you're not getting great returns, so you're hoping that you're going to get much better returns than you've been getting. Again, obviously past returns do not equal future returns, but one big day doesn't mean the turnaround is complete, doesn't mean the turnaround is for sure going to happen. Now they do have a nice dividend yield, 2.22%. Obviously a company that's been around a very long time. It has a huge brand. It's worldwide. It's all over the place. People love Nike. Some people only buy Nike. And a huge player in sports and shoes, apparel, etc. So let's look at some of their financials here. So you have year over year change down at 9.33%. Net income, net profit margin, earnings per share, all not good. But they basically said, well, we expected to have a bad first quarter, but some people are saying it's not as bad as they projected. So again, we saw the PE ratio is at 23.97. Now that's typically pretty close to the ballpark of what a lot of investors would look for, is in that 20 range. Some people like to go below 20. Some people say it kind of depends more on the returns. I think it does depend a lot more on what type of expected returns you might get in total. So you're talking growth plus dividend yield. Because some of them are going to have a really high PE ratio, like if you look at a tech stock, and they will still give you returns that make it worth it. The thing is, you are counting on a pretty big turnaround. It's not just a small turnaround. It's not like, oh, well, they just had a rough year. No, they've had a rough 5+ years, actually. Now let's look at the NASDAQ PEG ratio, which can give us at least an idea, one small indicator in the grand scheme of things of whether or not they may be fairly valued, undervalued, or overvalued. Now, right now, they are forecasting 12-month forward PEG ratio and saying it is overvalued. 2.29 is well over the score of 1, which would typically be, so if it's around 1, that's typically around fair value, and then below 1 would typically be considered undervalued, which is good. Overvalued means bad, obviously, and they are 2.29 right now, which is a little bit concerning. So now let's look at what customers, hedge funds, and insiders are doing according to Robinhood. So if you look at Robinhood customers, they've been buying more Nike over the past month. Hedge funds have mostly been selling. Almost 3/4 of them have been selling after Q1. We don't know, obviously this just happened today, so we don't know how Q2 is going to look like. It could be a little bit different, but so far in the last quarter was not looking good from the hedge fund perspective. Insiders, if you look at May 2025, which is the most recent, it was a 61% sale and 39% buy. It's a pretty even split between analysts in terms of the consensus for Robinhood. They have a just under 48% buy score and the same exact score for hold, and then 4.8% sell. So I would typically not like what I'm seeing here just from my perspective. Obviously not financial advice. Everybody's going to see this differently and look for different indicators. But to me, there's just not, you see a big spike in one day and you get excited. But do you want to buy right after a big spike? Are you overpaying at that point? A lot of times you want to buy low and sell high. Are they going to keep rising? Is this going to be a trend, or is this just kind of a one-day thing? Are they going to have a sell-off on Monday? It's hard to say. But if you look at their earnings, yes, they technically beat on earnings pretty much every single quarter over the last couple of years. But again, they did have a rough first quarter for the most part. Now, we do have some more good news. So let's look at this. The earnings call that really got people excited and makes them think maybe the turnaround really is coming. They beat EPS by 14.18%. And revenue, they beat by 3.48%. Quarterly financials look terrible, but it's like they had really low expectations and they were better than those low expectations. But does that mean you should give them higher expectations? Does that mean this is going to continue? When you have a $1 billion tariff problem coming up and they're having issues selling in China already, and they're going to have to diversify their manufacturing, you still have a lot of problems. You're also talking about a company that's been around a long time, and they just haven't had much growth. Another thing with Nike, they're getting more and more competition. I mean, look at all these retailers. Look at all these like individuals and small retailers popping up on Amazon, and you have Temu and all these other like cheaper brands popping up. Like there's just becoming more and more competition in apparel. Now let's look at how people think the company is ran. So if you look at what employees are saying about the culture at this company, they have a 4 out of 5 star rating. That's great. 75% would recommend working here to a friend. Also great. Really good approval rating of Elliott Hill, the CEO, 87%. Also great. So really good across the board. So the case for buying Nike right now, I think you really just think the turnaround is coming. They beat on some expectations, and that's, I think, really what caused that big spike. The case for holding is it's been around a long time. You know it's not really going anywhere, although they do seem to be getting more competition, and there are some concerns about tariffs and all of that. We don't know how long this tariff situation is going to last. It could literally change for the next president that comes in. We don't know. And they do have a really nice dividend. PE ratio is not too high. So maybe those would be a few reasons. Like maybe you see this as like, well, you're kind of in retirement or something and you're living off dividends and you like having more safer stocks that maybe aren't known for getting huge returns, but you like having a diversified portfolio with dividends. Maybe that would be a good reason to hold. And then the case to sell. They've been struggling for 5+ years to get decent returns. I mean, if you bought Nike back again around 5 years ago, you would have lost like 20+%. More competition, obviously, with retailers. Again, we have all these cheaper sites popping up like Temu. We have Amazon. We have all these that are increasing competition for Nike, even though they do have a lot of celebrities and brand deals and sports contracts. But tariffs, obviously a huge problem. They already are admitting that it's going to cost them probably $1 billion, struggling in China, and possibly an overvalued PEG, according to the NASDAQ website. Personally, I wouldn't really get too excited yet about Nike. I just think it's a little risky to be like, oh yeah, this is the time to buy. I don't have any Nike stocks, so I don't really have any to hold or sell. So I'm just kind of neutral on this. I'm staying away from it right now. I really just haven't seen enough to be excited about Nike, or really like apparel in general is not necessarily something I would want to jump into as an industry either. And of course, none of this is financial advice.